Hello and welcome to this educational presentation where today I want to talk to you about the 4 questions you must ask yourself before each and every trade. I really feel if you simply ask yourself these questions, you'll increase your odds for consistency that much more in any market and in any time frame. For example, let's take a look at this older chart of Adobe. Okay, someone looking at this would say, well, there's really no trend, but actually we made a top and maybe we're going lower, so let's say we're in a downtrend. Okay. All right, well, with the 4 questions I'm going to teach you that you must ask, you would have known that you actually weren't in a downtrend at all. For all probabilities, you're actually in an uptrend. And with the next question, you would have known actually to be a buyer, where to place your stop, and ultimately where to exit the trade, where potentially you could have captured over 22.5 points. So this is what we're going to be talking about today, the 4 questions you must ask yourself before each and every trade. And everything you're seeing today is displayed from our platform, the PTS Primo charting platform. This is the platform that I developed and designed with Pro Trader Strategies that really teaches traders how to trade and makes trading simple. So welcome, my name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to my webinars, I've been trading now for 47 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. If you're not familiar with what a specialist is, if you ever Google those pictures of the trading floor with those guys behind the large wooden podiums making these weird hand signals and shouting and yelling, those were market specialists. They made markets in roughly about 50 or 60 stocks. So I made markets during the crash of 1987 and the bull market that followed. So in my 47 years, I've traded every market environment, straight up, straight down, sideways. I've traded every type of system or strategy or method you can think of. Most likely they've been around before, they've just been rebranded. And in my 47 years, I know what works in terms of consistency and I know what doesn't. So that's our goal at Specialist Trading, simply to teach traders how to trade all the things I've accumulated in my 47 years so that you can take your trading to the next level. And you'll see that in today's educational presentation. Now, before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying these 4 questions, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you'd like to get more education on a daily basis, please feel free to follow us on Twitter or X, whichever you like to call it. There's our handle there, abbreviation for Specialist Trading. Every day I post anywhere from 5 to 6 different snapshots of techniques or methods, signals that have been generated. I also post little bits of financial wisdom. So there's lots of great free education on a daily basis. So please feel free to follow us on Twitter. Now, as I stated in the opening statements, we are first and foremost an educational company. So that's our goal, not to force feed you signals, not to tell you what to buy or what to sell, not to tell you what we think of the market, but simply to teach you how to trade. You see, a good mentor does not trade for you, he teaches you how to trade. This is the same way I was taught by my mentors over 4 decades ago, and hopefully I'll be able to instill the same process within you. Okay, so let's begin, and I'd like to start out by what one of the things my mentors started out by telling me is that trading is really simple. But it's the trader who makes it more difficult than it has to be. So many times we're really struggling with trading, but in all actuality, we're on the right track. We're just making it too difficult. We have too many indicators. We're following too many so-called trading gurus. We're waiting for too much news to come out. And by that time, there's just too many decisions we have to make in order to trade. If we keep things simple, if we really do the opposite of what we've been taught and strip away a lot of the stuff, that's when you start to become consistent. It was a difficult process for me to understand in the first time that I heard about it some 47 years ago, but in all actuality, it has sustained my trading by keeping things as simple as possible. And you'll see that in these 4 questions. So in order to be consistent, you must always ask yourself these 4 questions. Doesn't matter if you're a day trader, doesn't matter if you trade crypto, doesn't matter if you trade 4-hour charts of the British pound, or if you're a long-term investor. You should ask yourself these before you actually get into the trade. Okay, so here's question number 1. Am I on the right side of the market? Now, I know everyone always thinks going into a trade, sure, I'm on the right side of the market. This is a great system. I paid a lot of money for it, or I trust my methodology. But think about it. When you lose money, you're actually on the wrong side. In other words, you're buying and the market wants to go lower, or you're selling and the market wants to go higher. So how do you know for sure you're on the right side? Well, let's look at that chart again in Adobe. Once again, we thought maybe we were in a downtrend, right? But if price looks like it's really going nowhere and we don't have any idea, the first thing we always tell our students to do is apply what we call the buy-sell line. This is the 50-period simple moving average. And it actually tells us whether we should be a buyer or a seller. It tells us what side of the fence to be on. And so the way you apply it is just have your 50-period moving average plotted, and then you ask yourself, where is price in relation to the 50-period simple moving average? If price is above and the majority of bars are above, then the overall trend is up. And that means you will only be a buyer. If price is below, the overall trend is down. And that means you will only look to identify sell signals. It's that simple. So looking at this chart now, are we in a downtrend? Are we going sideways? No, the overall trend is up. Therefore, we're looking for buy setups. You say to yourself, okay, so maybe I shouldn't sell. And you say to yourself, okay, well, I've studied some candlestick patterns, and here's a bullish engulfing pattern. So, all right, if this works so well, then I'll look and try to identify this setup, and I'll go long if we trade above the high of this engulfing bar. Okay, this leads us to question number 2. Where do I place my initial stop? I know most traders say, well, shouldn't I find out where I get out with a profit? No, because this is going to help you decide that. So in our courses, of all our strategies and techniques, we have upwards of 6 or 7 different stop placements. Let's just use one of the most generic and simplest ways, which is meaning we just go back a few bars and look at the most recent pivot low. Now, pivot low is where you have a 3-bar pattern. You have a low, followed by a lower low, and a higher low. So that would be this right here. And if you draw these lines, it looks almost like a little downward arrow. So we'll place our stop right there because we know if price goes below that, most likely we're going lower. This leads us now to question number 3, where we can finally ask, well, what is my profit target? Where do I get out with a profit? Well, once again, we have upwards of 6 or 7 different ways to exit, but we'll use a very standard fixed exit. Very simple and easy to apply. Here's what you do. If we're going to be entering at this point right here, and let's say the trade doesn't work out and it goes against us and we get stopped out at this level right here, how many points would you lose? Well, it's calculated to 11.25 points. So you can decide for yourself, is that too much risk to take on? Is your account too small, or is that okay? Could you manage losing 11.25 points? You can sleep at night. If the trade is okay, then you say, all right, I'll take this trade. Remember, we haven't even got in yet. And what we want to do is double those point amounts. So if we're willing to risk 11.25, we want to make at least twice that amount. That's called good risk-reward ratio. 2-to-1 risk-reward ratio. We're making twice what we're risking. So you would take that amount of points and simply double it. And that comes to 22.5 points. And this is where you'd exit. You would double that amount from where you entered, and this is your exit point. So now we know where we're entering, we know where our stop is, and we know where our exit point is, and we haven't even entered into the trade yet. Which leads us to the 4th and final question: how do I protect my profits? Now, the reason we have to focus on this is, how many times have you been in a really good trade and you felt really good about it, you've got a nice paper profit, and then all of a sudden the next day something happens, some news comes out, and you have that trade turn into a loss, right? It's one of the most worst feelings a trader can feel. So how do you protect the profit? Well, we tell our students, especially in the beginning, to apply the 50% rule. That means where you decide to get in and where your potential exit is with a profit, you find out where that 50% area is. And once price gets at or near this level, you would move your stop to unchanged. So let's see how the trade unfolds. As we're sitting here and watching it, we see, okay, it's going in our direction. It's getting close. And now we've touched and even crossed that 50% level. Remember, we don't have to actually touch it. We can get anywhere near or around it, or touch it if we like. But once we get to this point, we move our stop to unchanged. All right? We move the stop to where we entered. This means now we're playing with house money. We don't have anything to risk. So if something happens and price turns around and all of a sudden the market falls out of bed, we're not going to lose anything. We're protecting our profit. So the only thing left to do now is watch the trade unfold. I've often told my students that if your trading is very boring, you're just sitting around watching, well, then you're doing it correctly, because that's the way trading should be. Trading should not be something where you're yelling and screaming, have 20 screens in front of you, where you have tons of phones ringing. That's really not trading. That's more of gambling. This is the proper way professional traders trade. It's basically like fishing. You cast your line out there and then you simply wait. So now we're just waiting and watching the trade unfold. We have our stop in at unchanged. We have our exit placed with a profit. And we just, like fishing, just see how the trade unfolds. And then ultimately, it gets to where we wanted it to be. And we end up, in this case, with a 22.5 point gain. Not a bad little setup, right? Remember, you can apply this to any and every strategy or technique you trade. Let's look at one last example here. All right, let's say you're looking at this and some guy in some chat room says, you got to buy this because he's a technician and he says, this is a classic bullish wedge. He says, monitor this because once we close above this descending line, this thing is going to take off. So you're excited, you're following this so-called trading guru, and the next day it closes above. So what do? You jump in and you want to buy, right? Well, did you ask yourself these 4 questions? Question number 1, am I on the right side of the market? So what do? We apply the 50-period moving average and we ask ourselves, where is price in relation to that 50-period moving average? Is price above? No, price actually is below. The last 1, 2, 3, 4, 5, 6, 7 bars have closed below. That's more than enough to tell us the overall trend is down. Remember, if the overall trend is down, we either want to avoid the market or look and be more aggressive to go short. So we're not going to buy here at all because the odds are against us even making money. And it's a good thing you didn't because in the next 2 days, you would have been in a losing trade. So now you say to yourself, wow, I'm glad I didn't take that. Okay, so I'll follow Steve's advice. I'll look for sell setups. And you say to yourself, well, there's some kind of a ledge here. There's some support. So if we break that and trade below, I will sell. All right, so that's your plan. Now we go to question number 2 once again. How and where do I place my initial stop? Well, once again, we're looking for one of the most generic ways, and that's the most recent pivot high. So we just go back in time from where we would be entering, and we see that a high was established right here. If we put the lines above, it appears this kind of arrow approach once again. So what we want to do is ask ourselves, okay, if we're willing to place our stop right here, is this okay? Can I risk that amount? And that leads us to question number 3. What is my profit target? In order to find out what our profit target is using this particular exit point, we need to know how many points we're risking. So if we entered here and all of a sudden the trade went straight up, how many points would we lose? Well, we'd lose 8.20 points. If that's satisfactory, if that's okay with our account or our ability to sleep at night, losing 8.20 points, we say, okay, I'll take the trade. So we simply double that amount. 8.20 times 2 equals 16.40. And now we want to subtract that from where we enter it because we want price to go lower. So now we just simply subtract that amount, and this tells us our exit, if we went short, would be at 51.15. So once again, we know where to enter, we know where to place our stop, and we know where to get out with a profit prior to even entering the trade. Which leads us to the 4th and final question is, how do I protect my profits? What if the trade goes against me? Well, we use the 50% rule, meaning that half the distance from our entry to go short to where our profit target would be, if price reaches that, at or close to that, we will move the stop to unchanged. Therefore, we're not risking anything. So let's watch the trade unfold, just like fishing. And in 3 days, we got to the 50% level. So this stop is canceled, and we move it down to where we got short at 67.55. Once again, we are playing with the house's money. We are not risking any of our money. And the only thing left to do is watch the trade unfold. Just like fishing, we sit back and watch. And the trade continues to go in our direction and ultimately gets to the 51.15 level, and we made a cool 16.40 points. Once again, do you see how simple trading can be? It's the trader who makes it more difficult than it has to be. All right, so let's review. These are the 4 questions you must always ask yourself, regardless of what market, regardless of what time frame, even regardless of what strategy or method you're applying. Am I on the right side of the market? Where do I place my initial stop? What is my profit target? And finally, how do I protect my profits? If you apply these 4 questions prior to entering into the trade, we truly believe you will increase your odds for consistency. Now let me tell you about today's special discount offer for all the attendees viewing this particular video. I'd like to give you some more edges, some more techniques that I've accumulated in my 47 years. This is a great program we have called the Secrets of a Stock Exchange Specialist Video Seminar. Some years ago, I was the featured speaker at a conference, a trading conference in Colorado, and they videoed the entire presentation. So this is what this is. It's 3 hours of trading techniques plus a full strategy. You'll get more high probability trading edges. I'll tell you about which indicators not to use. I'll go into the difference between a system versus a strategy. I'll tell you what the #1 chart pattern is that you should always be looking for. Once again, we'll go into detail about being on the right side of the markets, but the best thing about the Secrets of a Stock Exchange Specialist training sessions is that you get a complete strategy. This is strategy #1. This is where you're going to get the complete rules for entry, exit, stop placement. You can apply to any market and any time frame. Okay, so let's break this down. Usually on our site, the Secrets course runs for close to $1,000. There's that much information jam-packed into the video seminar. But here's what we're going to do today. For watching this video, we're going to discount it tremendously. For a limited time, you can get all this information plus a free strategy for only $37. Think of that, $37. You most likely can't even go out to lunch for less than $50 these days. But for $37, you get more than 47 years of techniques and knowledge I've accumulated in my trading career. But this is for a limited time only. So with an extra bonus included, here's what we're going to do. Along with your purchase of the Secrets course, we will include a 50% discount on any other product we sell, any other trading strategy, any other methodology, any other technique or indicator. This is a great, great offer, a great way to get familiar with how we teach and how we really want to make you a better trader. You owe it to yourself to take your trading to the next level. Start the year out right, get on the right track, and take advantage of this deep, deep discounted course. Okay? Remember, these are the 4 questions that you must ask yourself before each and every trade. So here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. They're in charge of all the discounts, of all the courses, and all the signing up for our different packages. I would highly recommend giving them a call at area code 310-598-6677. There's absolutely no obligation. They can give you information. But remember, if you're truly serious about becoming a consistent trader and applying more of these edges I've accumulated, please call them as soon as possible before this deep, deep discount goes to the wayside and it's completely over. Now, there's the link for the info page on the bottom if you'd like to get more information, or if you'd like to sign up online, you can simply copy and paste that link, okay? Now, as we conclude, I want to thank you for attending today. I hope you learned something. I wish you all the best of luck in trading, and I look forward to seeing you in our Secrets course class. Thank you so much. I'll talk to you next time. Bye-bye.